Good afternoon, good morning, good evening, wherever you are in the world. Welcome to the proptrade.com. Another day, another all time high for the mighty gold and silver markets. $5,600 has been touched today in the gold market. Last night, the spread took us up there, and again this morning in early European trades the end of the Asian session, we went to that magic 5,600 level. So the relentless march of the commodities continues. Silver's even more exponential. We went over 120. I think that's the all-time high, isn't it? At 117. I think I can't remember why that is, but there we are. $120 an ounce for silver as well. Just relentless, exponential moves, as we've said for many days now here on the silver market. Really, really parabolic. Through $100 on Friday and just continued the rally this week. Massive volatility on Monday. I actually finished down on Monday, ironically, but followed through on silver. Gold's been a smoother ride. 10 of the last 12 days. Is that one? Is it? I counted this earlier. I can't remember now. 1, 2, 3, 4, 5, 6, 7, 8, 9. So 9 consecutive days up. And if we go back weekly, we've got. I think we're into our fourth consecutive, really, really strong week. Obviously, starts of the year. There's the beginning of the year. And 4-week rally getting bigger, as you can see there on those charts. Obviously, this week isn't finished yet, but big bodied candle this week, huge one last week as well, through the $5,000 level this week. And as I say, 5,600 has been breached today. Let me just reduce my hair because my hair looks absolutely awful on there. I'm not very old bugger. But there we are. I don't see my scratchy, scrattled head, do you? Anyway, gold bid, silver bid, no change there. Yesterday we had a bit of a move for the dollar, but that's been reversed since we just look at the euro here. Come back to yesterday's chart. So no change from if you weren't with me last night, no change from the Fed. I'm sure you're all aware. Nothing particularly in the in the statement of any changes. Really interesting that the journalists did try to push Powell to comment on all sorts of things. He was all with political overtones, from Lisa Cook to who's going to be the new chair to his relationship with the president, all sorts of things. His attendance at the hearing for Lisa Cook as well was brought into question. All sorts of. He was just complete straight bat. Continued to say that the US economy was doing okay, basically. Plausibly expect neutral rate as where we are. Somewhat elevated for inflation. Nothing of any news from. I'm just looking at my notes I scribbled down last night when he was talking. Labour market stabilising, he called it. Job gains are low, obviously, but stabilising because of the immigration crackdown and people not joining the labour market. Solid pace for the economy. But obviously, it also talked about housing being weak, impact of the temporary shutdown. But he's also said, goods inflation and the impact of the tariffs may have spiked. But added to that, they've been a bit sticky. But services inflation continues to be disinflation, is what he called it last night. So yields, 10-year yield closed around 5.25 last night. It'd been a bit high, went to 5.26 at one point, 5.24 to start the day, and dollar sort of picked up and then come back down. So all in all, the non-event that many of us were expecting, and again, as ever, he played with the straight bat around all those key things. And again, he was somebody tried to comment on the asking him about the volatility of the forex market, the dollar. And again, he said, well, that's not part of our parcel. That's the Treasury statement. And, there we go. So the dollar had improved against the euro yesterday. Here, as he started speaking here at 7 o'clock, we went down to 118.90. And really, since as the statement came out, no effect. We rallied back to 120 overnight, and we've slipped back down again. And we're basically 50% of the gain that the dollar had yesterday. We're back to flat. Right, it's given half it up, and it's hanging on to half of it basically. But we are obviously in the higher time frames. Dollar remains weak. That mantra really hasn't changed. The 4-hour is still bid there. You can see that this week. And the daily, huge spike we had on the 27th, down gained yesterday, and that's how we've bounced back again today. So 120, clearly profit taken from both institutional and retail traders, hugely psychological. Obviously, that intraday spike we saw on Tuesday took us to that 120.80 area. That's the next upside target for the bulls. And clearly a bit of obviously significant profit taking yesterday after this big old run we've had. And so dollar story remains weak. Trump's come out just a minute ago. I've just seen a Truth Social. He's having another swipe at Powell not moving rates quickly enough. Obviously, the big news last night was the which I shared with you on Discord, was the three big reports last night: Microsoft, Tesla, and the eye-watering one was really Meta. The amount of money these guys are spending. I made a note of it somewhere here. These are my just scribbled notes. Meta, the thing that caught my eye was capex spending, 115 billion to 135 billion capex spending. They were up 9% immediately after hours. That's changed this morning, obviously. Expenses. This is expenses. This is cost of sort of literally expenses of clients and travel money and everything. 162 to 169 billion dollars on expenses for 2026. Massive revenue expectations, 53.5 to 56.5 billion for the revenue for the first quarter. It was better than expected. And they're starting to stick adverts in Reels, I noticed this week. Apparently that went live last week in the US. So they were positive. Microsoft went the other way. They were down 9% at one point, 80 billion. And earnings per share came in at $4 compared to $3.80. Yeah, that's quite a significant beat. So, but earnings per share came down. And then Tesla, they were up 4% immediately after hours. Are they still a car company? Somebody was saying this morning on CNBC. Earnings per share actually came in at 41 cents per dollar, 41 cents per share compared to 45, and revenue was a miss. No, revenue was a bit better, but he's talking about the Optimus 3. These humanoid robots ready by the end of the first quarter of 2026 and into production by the end of 2026. Obviously, some of these dates that Musk puts out quite often get missed, but 1.1 million customers have ordered full self-driving cars, also of interest, and 2 billion has been assigned to xAI. So he's pushing that to his xAI development. So huge numbers yesterday. Stock markets continued to rally. We'll come back to yesterday. Had a positive close yesterday for the Nasdaq. The S&P was flat. We closed at 6978 yesterday. And they're down this morning, so Nasdaq's down, even having pushed to new all-time highs. The S&P also actually turned positive again. It was down earlier, through 7,000 yesterday. We were through 7,000 again today. New all-time highs, new all-time high close yesterday and the day before. This is our derivative market at the moment, so pushing higher. We had two open positions on those two, and reversed to our very tight stop loss yesterday. We got a 0.45% gain on the S&P and a 1.1% gain for the Nasdaq. That was nice. That's compared to the loss we had on the DAX. I made a mistake with the DAX last night. It was supposed to be short, and I actually took a long, but that's trading again, my friend. So interesting handle you got there, Hate Moet. Good afternoon. How are you? Hope you're well. What are you trading? Let us know what time frame you trade, whether it's 1 minute or 1 month or 1 week or 1 hour, let me know. We got strategies that cover all opportunities everywhere, and strategies cover all type of approaches. This is a simple strategy we got on here. We use the stochastics and the Bollinger Bands. It's a mean reverting strategy, intraday plus. So, Omoy, let me know how you trade. We'll see if we can find some trades later on. Let's have a look at the data. The data. Oh, excuse me. Wholemeal toast for lunch. It's a bit stuck in there. Excuse me a minute. So we were expecting claims, weekly claims, 209,000. So it's still very, very weak. It's at that 200,000 level. It's 3,000 more than it was last week. But hey ho, if we look at the chart here, let me have a look. There we are. If you look at the chart of over the last few months, it's tightening jobs market. This 200,000. Look how low this is. This was from last week, 200,000, 209. So it's been it's argument about jobs that Powell talked about yesterday, and the impact of less people moving into the jobs market, participation rate slipping a tad, and obviously the impact of the immigration clampdown is having an impact on the actual labour supply, but the labour demand is quite weak as well. We had yesterday Amazon announcing another 14,000. Was it 14,000 or 16,000? I can't remember. But it was a total of the announced 30,000 jobs cuts over the last 3 months. There was 1,000 job cuts announced. Was it Meta yesterday? So yeah, and it's all. Is it? Some of it is impact of AI, but a lot of that productivity gain is still yet to be realised, and this could be a key year for it if the realizations in productivity gains and the bottom line gains isn't seen through this massive eye-watering investment in AI. And that's what Meta talked about yesterday. Huge numbers. Microsoft as well, about expecting, I say that capex expenditure, 115 billion to 135 billion capex expenditure from Meta announced yesterday. I mean, and shares went up on the back of that. So they've got to start seeing some feedback on that. Moet, you're saying, what do you think about us shut down? How gold will react? What your perspective? All right, the shutdown. I have a feeling this time it's not going to happen. I don't know. I haven't followed. I've been out in the last couple of hours, so I haven't seen the latest breaking news. But I mean, they're talking about it could be early as Friday. I don't think, this is just my take on it, Moit, which is what you've asked for. I don't think they will actually come to that. They might see sense between them after last time, but I may be wrong. But the gold rally. We'll come back to the. I'll come back to this in a minute. But the gold rallies, which is what you're asking about. Let's bring that. Gold, gold is a safe haven bid, and things like government shutdowns, they don't like it. Markets don't like that. It's uncertainty. Markets hate uncertainty. So the bid on gold knows no end at the moment. But I mean, the question you would look at is, well, look, it's a very steep rise even this week. We got massively rising this week. So people try to short this, but look at this is the end of day situation. So as I said before, we've had consecutive new all-time highs for 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 consecutive days in a row. That's what consecutive means, obviously. New all-time highs over at these eye-watering levels. So be careful shorting it, my friend. If you're a big saying here, so you're saying I'm a swing trader using weekly daily bias and taking trade on the 4-hour engulfing with a 2-hour 15-minute SOS and some other confluence. I trade on support and structure. Very good. That's a sort of, I'm in those sort of levels. End of days where most. Well, I'm saying end of day. I'm not. I'm actually making more money at the moment, scalping on the 5 and 2 minute chart. But anyway, I'm a swing trader. Yeah. So look, it's bid. It's really bid. So we come down the time. Oh, we'll go up and down. Okay, so this is the daily, very, very well bid. We got to the weekly. The weekly, we've had 12. We've had these very strong starts of the year. So, going back 12 weeks, I was counting this earlier. The 12 weeks, which takes us back to 4,000. Look how the down weeks were very small. We've only had 2 or 3 down weeks in the last 12 weeks. The last 3 months has been absolutely amazing. So you'd say, well, where are we getting overbought? Where are we getting overbought? Stochastics here very in the overbought area, but there have been all year. Look at this. The K and the D line here on our sort of smooth stochastic as well. The 5, the 10, the 6, and the 3. We look at some other setups on this, different layouts. So we look at the MACD, for instance, area. And look how high the K and the D, the MACD and the signal line are here. 247 here on the daily chart. Look at this. Look at these. Look at this. There we are. We zoom in. I mean, these are parabolic. We've been saying I've been saying as well. This can't go on, but it has. Markets can keep going much longer than our accounts can survive. If you're trying to take shorts on this, so be very, very careful. So that's bid. So sorry, let me get back to your point you were bringing. So you're talking about 4-hour charts. So 4-hour charts here. It's bid. This is a trending setup. So up to the upside. So taking trades on 4-hour engulfing candles. So yeah, I mean we got a 3. You could argue that's a 3 candle top, higher, lower. So a lower highs. We got a low on the 4th. So that looks like that might have rolled over here on the 4th hour in the 4-hour setup. I don't know if you agree with me or more. Just from a candle setup there on the 4-hour time frame. Obviously, the parabolic SAR is down there at 5386. You're going to use that for a target level. Stop loss up here. See how it moves down. But it's been a monster move. Where you're trying to put a retrace level, a Fibonacci on that is very, very difficult because has it rolled over? It's really difficult to call. You could push, and I wouldn't recommend this, but you could push said that's a leg on the 4-hour because we've gone from sort of confluence around about the 5,240 level here, 5,200 level to this 5,600, and we rolled off. So where could be the next downside target? Well, the key 61.8 sits right on where that parabolic SAR point is. So that could be a downside target 5,378 to the downside. But be careful trying to short this monster rally. Obviously, it will give up some, given that we've got to 5.6. Sorry, what else are you saying? You're saying I trade gold and silver in the Asian session only. Okay, in momentum, looks 5-minute entry and follow trend accuracy is currently 83%. Excellent, that's great. As long as you're making money, Mo, that's the most important thing. That goes for everybody, whether you're trading like Mo as a swing trader on the 4-hour and the weekly charts, or down at the 5-minute system, and it works for me. If you've got an 83% hit rate, that's fantastic. That's really, really good. So long as you're banking the profits, as long as you're anchoring those profits and keeping the losses small, because that's the trick. You can still, have an 83%. I've seen guys and girls, for that matter, with really good hit rates. One guy was using a martingale system. He had a really good hit rate, bizarrely, but he wasn't making any money. He was risking too much at the end and blowing it all ultimately. So instead of his equity curve, imagine this, instead of his equity curve being nice and smooth like this, it was zigzagging all over the place. It was up and down. So one day it was very good. Next day it was very bad. If I just, this is what I'm talking about. So this sort of movement up and down. He was panicking at this point because he would never stay in the trade because it was great here and panicked on the way down here and was selling down here. So it's you want when you're looking at making money, you want it to be a general smooth or even flat smooth. That's what you're looking for. You don't want big drawdowns, and that's one of the big problems of martingale. It takes you out, and a strategy that you can't follow through. So yeah, it's what works for you, my friend. So if 83% hit rate is a reflection of how much money you're making, fantastic, well done. Stick to what works and stick to what works for you. Like you say, two assets. It's great news. Two assets, one session, different time frames, and we make money. And that's the trick of trading, and that's the trick of staying in business. Just take all that off anyway. So ironically, the government shutdown should be positive for the gold market. Is my take, my perspective is what you asked for. So there we go. But yeah, I'd be interested to see some of your charts. Stick it on the Discord group. Are you on our Discord, Moy? This is us here. Discord. This is our Discord group at the Prop Trade. So share I put my end of day trades on, not all of them, but most of them. Here on the trade chat. I can't share screenshots onto the main general chat anymore, so I just put on what I've done. And Shaswat, it's been quite. There's a couple of other guys that were quite prolific. They've sort of disappeared this week, but they've probably made enough money. So, but don't put stuff up after you've won. And don't only put up your winners. I put up everything. Most of the end of day trades that I take each night. I put up somewhere on my where was last night? Here we are. Here's last night's trade. So we were short Euro New Zealand and short Pound New Zealand just before the close. In fact, actually, I haven't said that. If you were with me yesterday, I took these trades as I closed the live session yesterday because we looked at them live, and I'll do the same thing now. They've both gone to target one. They've both bagged 25 pips because what I tend to do is take half of the position off when it gets to T1 because it's a trend following strategy. I'm looking for it to move back down. They've both retraced, but didn't quite. I think they might go back to entry, but the stop loss hadn't been moved down. Sometimes the stop loss gets moved automatically to entry once T1 has been hit. But these are still open. These two. I say the S&P we closed out, and the Euro. Aussie New Zealand, that was the second close. The second part of that trade was closed out. I haven't updated that. But yeah, and then this was, you can see it's 11 o'clock last night when I posted this, and I misread the chart. It should have been a short, but it was only half a position anyway. But I actually went long, and but this morning, I'd say around about just before the open, I was shorting the DAX. And I looked at my daily time frames, and so the 5-minute chart, I took out 60 pips on the open on the DAX, but it also meant I closed out the long position I'd had as well, short this morning on the DAX. But I'll show you that later if you want. So yeah, Moy, get your ideas up here on the trade chat box if you're actually doing some trading. So nice to have you here. Thank you for your time. Appreciate it and your feedback. Yes, sure. Cool. That's great. Thanks, mate. I say obviously the Asian session, I'm mostly asleep. I tend to, by 7 o'clock, I love trading the DAX. I don't know about have a look at the DAX if you're I don't want to pull you away from what you do, but I like the DAX right from about 7 o'clock my time in the morning. It gets some nice moves. It's 8 o'clock in Germany. I don't know where you are, Moy. I'm assuming you're in Asia. So I assume you're somewhere in Asia, whether it's India or Indonesia or Malaysia or wherever you are. Welcome. So yeah. Anyway, hope you're well and keeping well, and your family's well and keep safe, and you're managing to make money and doing good things with it. Whether it's, I don't know. I mean, what is your target? What's your plan? Are you CAD dollar? All right. Okay. Is that you? Yes, I'm sharing on trade of CAD dollar. Okay, I'll have a look at that. Not CAD dollar. We'll have a look at that later then. All right, my friend. Very good. Having said all that, I'm actually down for January. I've had a shocking points January. I had one of the worst weeks in 72 weeks last week. I had worst losing week. It's 72 weeks, so 18 months, over a year and a half. But that happens, it's a massive 1,000 pip loss last week. And I think I'm still down this week as well. I haven't actually done all the sums up today. I'll do that obviously tomorrow or tonight. Anyway, where was I? So yeah, gold is bid. Let's go back to my one of the setups I use for many years, the simple crossing moving average strategy. So there we are, 20-day moving average at 4,825, and we were at 5,600, 5,600. Last leg I looked on this was, it's just burst. So again, try not to try and catch the top. Markets that are high go higher. Markets that are low go lower. Don't think that the low is in or the high is in. They can run and run and run much longer than we can be liquid for if you're trying to catch the top or catch the bottom of something just because you think it should turn around. Markets don't care what we think. Markets do what markets do, and this is a very bid market, the silver and gold market. And the silver is even more parabolic than the gold market. Anyway, crypto. I know a lot of you trade crypto. I'm a bit bored with it at the moment. It's just sideways action. Looked like we were breaking out as we went over that 95 area. Let me go back in the 92 zone. Go back to the one we use most of the time, which is this one. No, it's not. It's Bollinger Bands here. It's this one. So, yeah, it's the weekly, that, isn't it? So. Daily, so we'll remain sort of range bound between this 92. Again, nothing's changed since yesterday. It looked like we were having a nice move up. Went to test 90,000 yesterday, ran out of puff, and we're back down 88,000 today. So again, nothing I can get excited about or trend or trade, to be honest, on that one. I mean, there was a bit of a sneak of a potential long trade here this week, but it's see how the K and the D line here on the stochastic. I'll bring that up. You see that there's a bit of action on this move here, but it was sold as we got to 90,000. Then we're down again today. So it's pitiful sort of move. So it's not something I want to get involved in at the moment. Crypto on an end of day basis. So nothing happening there. Energies on the other hand, oil continues to bid. Obviously the saber rattling from America and the saber rattling back from Iran over what the US do next has lifted oil prices. It's had a strong week this week. It was sort of telegraphed last Friday when we went through $60 here on WTI with a big strong candle. Still wasn't convinced on Friday. We had an engulfing negative candle on Monday. And then the rhetoric got ramped up on Tuesday, and we've been higher Tuesday, Wednesday, and now Thursday. We're trading at 65. That's a key level here on WTI. So we probably missed that rally. I haven't got any live trades on this, but $60 was a key trigger, and 62 was the key resistance area, and we've gone through that quite quickly. So that would have been a long trade, a trend following trade. On Tuesday night, this mean reverting strategy is looking it's pushed up, and it's not working. It's a trend following move now. So both Brent and WTI, the oil markets, bid on the worries about what's going to happen next with Iran and the United States. So the Forex, the dollar remains weak. We had that little spike yesterday. But we're still down 138.80 for sterling dollar cable. There we are. This big move, profit taken up here. That's the level to look at now. The close on Tuesday and the open on Wednesday, 138.45, 42. Interestingly, it's not a key fib level, but an interesting fib extension level from the last leg down. That's not even. I can't really call that because that leg didn't end there, did it? It actually, whoops, I forgot that was still on. Let's just do that. I can delete that because that's not relevant. So if we're going to do that, a fib, let's just redraw that because it went low, didn't it? So that's not really a leg, to be honest. But 168 was breached, and one so extension of that is that. But again, that's not really relevant. That's not really a leg. It's, well, I suppose it was yeah, okay. I suppose it is a leg if we've had this 3, 4, 5. Potentially, if that's what that is. 1, 2, 3. It can't because 3 is too short. There's a lot. That could be 3 from that. I'm not a great Elliott wave man, but you can see the waves there for sterling. But anyway, again, another one, a very weak week for the dollar. Really strong move for cable this week. There's last week's Thursday. There's Friday's big move up on the 23rd, and Monday, Tuesday, Wednesday, Thursday. So strong week from last closing of last week. So this time last week we were down. Last Thursday we were down here as Trump was starting his chatter at 134.25, and we've been all the way up to 138.60 thanks to his comments about it doesn't matter about the weak dollar. And then Bessent called it back yesterday. Treasury Secretary Bessent called it back yesterday with regard to wanting a strong dollar. But the gap here still needs to be filled from Friday to Monday. That gap, I mean, the wicks sort of got close, but the body of the candles hasn't been filled. So that might be looking forward first week of February for a retrace back down there. But at the moment, dollar remains weak. The Aussie 70.60, so over the key 70 level still for the Australian dollar. Similar pattern, stronger move. Swissy, similar pattern, as it going in the opposite direction. Obviously, there's the gap on from Friday to Monday. Big down day on Tuesday. Bounced yesterday from the .76 level, multi-month lows. But you can see here the stochastic still moving down into the overbought area, but not looking to cross. So still signalling down. There's a buys at 7.76 on Swissy, and we're at 76.77 at the moment. The currency at the moment, the dollar, the yen went as low as so far this week as 152 zone. Again, a bit of a bounce yesterday, but it's an engulfing candle of the negative inside bar, if you like. There's the gap on the yen. So all eyes now on the election of the lower house in Japan on the 8th of next weekend, the 8th of February. 153.25 dollar yen, and widening Bollinger Band suggests a bit more volatility to come, potentially at the downside. As we said yesterday, this cluster back here from the end of the summer takes us into the 150 zone again. In fact, 150's. In fact, 150 even closer now. I thought that was 150 zone. Probably no, it wasn't. It's the next support level, isn't it? 150. So another 300 pips to the downside could easily be on the cards for dollar yen before this move down is tested again. But it's a big move down this week. CAD 135. Again, another same move. Weak dollar continues. We've breached 135.50 this week, seen as a support area. If we zoom in, look to the left, look at our summer support here in June and July at 150, 135, 50. Is that 135, 50, 135? It sounds 135, 50. Yeah, the blue, that purple line there is 135.50. So then we look to the left again, and then you can see here that takes us under 135, and these lows from September 24 took us to 134.25. So this is the summer of 2025, June and July, and here we are, February 2026, back down towards those levels. So a weak dollar story continues. How long is it going to run for? Who knows? Who cares if you're short? Just stay on the boat, a bit like the long trade on the gold market. Don't get thrown off. Don't get your stop loss too short, too tight if you're trailing this down. But also similarly, don't get too greedy. We are oversold or overbought. Depends where we're going here. It's down. Obviously, Euro's gone the other way, overbought, so on. But don't get thrown out as well. There's plenty more pips in this. It's moving. That's the most important thing as trend following traders. It's moving. These the Kiwi is another great example. 60 as well being breached this week on the Kiwi. So 60, 75, and again, if we roll this in, this is there's that summer levels, which took us to 61 very briefly, and then before that, you have to go all the way back to October 2024 before we're up at these levels. So 60's been breached, dot 61 for Kiwi, next upside target. And indices we talked about, energy we talked about, cryptos we talked about, forex we talked about, and the data today is out. So I'm done for the day unless somebody has got something else to add. Right, Moy, you're still here. Thank you, my friend. Oh, you're in India. Okay, so you're 5.5 hours ahead of me, I think. I was from February. I'm going to move away from doing these news announcements or these daily lives around the main news of the day, if there is any. Some days there isn't any, and I'm just going to do it later in my day. So it's going to be more your evening time, because I know a lot of our clients and customers are in the Asian area, in the subcontinent of India and Pakistan and Bangladesh and that subcontinent. So I'm going to try and fit in your evening. If you're out at work or you're at university or wherever you are, whatever you're doing, I'm going to try and fit in with your evening time. So I'm going to do these later in the day, my time, sort of tea time, my time, to fit in with your evening session. See how that goes. See if we get more people here. But anyway, Mark, thanks for being here today. See, now I shared it on Discord. It takes time but works. I usually learn that slow and steady gains are better. May it take time. Exactly, slow and steady. Absolutely. As I was saying before about you want a nice smooth equity curve rather than that jumping at whether you're making lots of pips one day, losing lots of pips or even more pips, because that's what tends to happen. Our mind is the big thing we're fighting all the time. We remember our extremes, remember our really good days, remember our really bad days. But the impact that has on our psyche, the negativity is much greater than the positivity, unfortunately. It's the way we're built as human beings. Wherever we are in the world, wherever we are in the world, whatever we believe, whatever religion we are, whatever colour our skin is, whether we're females, males, our psyche, our brains are, we take our skin off, take our skull out and take our brains out. They all look the same. We are all the same. And so we act the same psychologically. So the idea of losses hang on us much more than the euphoria of winning. It's just the way we're built as human beings, and we've been like that for millennia. It's just the way we've been developed, created. Whatever you believe in, I say religiously, it's the way we work psychologically, and that's the key thing. It's about keeping your head straight, and that's I think more you talk very sensibly about that, about slow and steady rather than big wins, big losses, because eventually it all ends up at zero or negative. The losses take over because you never get to your consistency that you're looking for. On what basis do you take trades? My end of day trades is a system I've developed and used for many years. I'm obviously not going to, I don't feel I want to share it with you because I've developed it, but it works for me, and I know it works over time, and that's the most important thing. So I can get away from it for months and months, and it come back and it's still working. So I'm happy with that. It's principally an end of day basis. I'm happy to share these strategies as well, or these very simple systems. They all work, and they all work well enough. So this one, the one we're looking at now, the Bollinger Band and stochastic setup, it's a standard Bollinger Band, and this is a stochastic which is a bit tweaked. I need to thank a guy called Trevor Neal, who first introduced me to this setup, 10, 6, and 3 on your stochastics. It smooths out the spikiness of the stochastic oscillator. So this is a mean reverting strategy, and it has 2 simple rules, and I like it. Let me show you when I use it most. I use it principally on the indices, and principally when I wake up or first look at my charts. I like the DAX rather than the here in Europe, because it tends to follow the system a bit more, and the numbers are bigger. So from a risk point of view. So and I typically not always, but the ones I share with you here is typically here on the 5-minute time frame. So what this system works, or again, it's two very simple rules. Now, again, more, I don't know how you trade or how you take your trades, but I tend to find the simpler systems work more effectively. So adding lots of indicators or complicating with too much volume or too many potential target areas or stop loss areas, deciding what sort of lot size to take just clouds the thinking. So the simpler the system is, the easier it is to automate and code it and get it all written. But if you're using a manual system or a mechanical system, it's very simple to follow. So two key things here. Firstly, we need a touch of the outside of the Bollinger Band, whether it's the upper or lower. It doesn't matter. If it touches the outer, we're looking to go long. If it touches the upper, we're looking to go short. And then we need a cross of these, the K and the D line on our stochastic. So remember the stochastic set at 10. Let me show you the settings for object tree, sorry. For the stochastic. There we are. So blue lines are percentage K, orange lines are percentage D, and we're looking for a cross, okay? The limits for the stochastic are standard. So 80, anything over 80 is over, or anything under 20, traditionally known as oversold. So what I've done, I've set the K length at 10, the smoothing at 3, and left the D smoothing at left the D smoothing at 3 and changed the K smoothing to 6. So it's 10, 6, 3. Again, whether you're using MT4, MT5, or TradeView, or whatever it is, these are the settings for my stochastic. Okay, faster, smart, slow. So we're looking for a cross of the two, the K and the D line, once we've had a touch of the outer Bollinger Band. So if we work back from where we are now, okay, the last, we're in the under half of the Bollinger Band, so we're looking for a move up, but the trend is still down, isn't it, here at this point? So we've gone down. So we get a cross there. The blue goes, touches, we've touched the outside. Sorry, let's zoom this up. We've touched the outside of the Bollinger Band there. And then 1, 2 candles later, we get a cross. But that cross is flat. It's not clear. There's no daylight between the blue and the orange line. So I'd leave it, and there. That would be the entry. 13.25 here. So scalping this on the 5-minute, that would have been a clean entry. Okay, on the, oops. I don't want that. I want a vertical line. So that's a clean entry on the, so you can see the blue was crossed from below to above the orange. Here we were sort of stuck. We'd already touched the outside of the Bollinger Band here at 12.55, but we don't get filled. The second indicator doesn't give us a clear indicator until 13.25. So you've got to be patient, as with all sorts of strategies. I'm just demonstrating this one. Now then, what typically happens is that target 1 is the midline of the Bollinger Band. So it just needs to touch it at some point. So, and again, 5, 10, went against us 5. Sorry, what were we talking? 5, 10, 15, 20, 30 minutes after we took our trade here. It's whatever that was, 24. I mean, obviously, we won't get in exactly at that price because of the spread and all the rest of it. But let me just put that on there as an example. So that was let me change that to gold, the vertical, because that's my setting. So that's the entry, the gold. But it's not that gold, is it? It's that gold. So that's our blue to go, or green to go, it should see there, at 24, 5, 6. So first target would be there, but it's very close. So I would probably say, well, I'm taking a little bit off. Normally it's 50-50. So 50 at the midline and then another 50 at the other side of the Bollinger Band. But because it's so close, I'd have probably only taken 30% off, 20% off, and then left it. So that's now closed out completely. So that's a successful 2-leg trade. So quite often it gets to the, then it turns down. So that's a successful. Now then, what we're looking for now is to either these stochastics to continue, and again, because this was so close, I would have taken a little bit off there, say 20%. Nice strong candle here at just before 2 o'clock, 13:55, and then we touch our target. So instead of closing it down completely, I might take another 30% off and left 30% still live. If I'm doing this manually and watching this, because we've still got a rise in the stochastics. So the stochastics can, the K and the D line can still get into this, and probably will get into this overbought area before they cross and touch again for us to turn around to take a short. Remember what we're looking at? We're looking for an extension of the move. This is 2 standard deviations away from the mean price of the DAX today. So that's now looking to go short because it's touched the outside. We've bagged our profits, but I've still got a little bit on to the upside because we might burst out of here and continue up. Okay, again, it's just a bit more of a sophisticated way of trading it. The simple way is the simple rules. So take half at the midline of the Bollinger Band and the other half if we get to the other side of the Bollinger Band. One thing I haven't talked about yet is the stop loss. So the stop loss is either the bottom of the turn, which clearly on this move was here. So stop loss would have initially been here, or 2 or 3 candles back. It depends how tight you want it to be. But again, typically stop loss would have been there, and then I trail it because this is a mean reverting strategy. It's going to reverse at some point. So if we just make that red, that's the initial stop loss from the entry there. So that's our risk, if you like. That's why I only took out a little bit here because the risk reward was poor. It's not great on these systems, but you can see it's more than 1 and a bit, nearly 2 on the ultimate move. But I would have moved my stop loss up on this candle here. So the stop loss at this point, once we'd moved up, would be now here. Got to target 1, and then it's typically just below the midline of the Bollinger Band on that one. See, so my 30%, my 50%'s out, my 30 or 50%'s out, and whatever I said it was, 30% still on because we're still moving up. This is now the blue line has moved into the overbought area, so I'm getting a bit twitchy now, or watching again as we're moving higher. So ram up the stop loss to the once this completes in another 3 minutes for the final 30% of this trade. Okay, so again, I'm complicated a wee bit, but that's how that trade works. The other strategies are very similar, except they tend to be more trend following strategies. So the crossing EMA is just what it says. Basically, we're waiting for a cross of the 5 and the 9. This is the 5, the 9, and the 21 exponential moving averages. You can see them here, 5, 9, 21, and it's a trend following strategy. So we first one is the cross of the 5 and the 9. I'll just take this down. I haven't got the 4-hour chart. And then confirmation is a break of the 21. But as you can see, it's because it's moving averages. They're exponential moving averages. They're a bit lagging, so you get lots of false signals. So, but overall, it's a very successful trade. And obviously, because the big moves stay in, and again, you trail your stop loss down. You can use the midpoint, the mid moving average, the 9 period for a candle to break through. This one, we need a break of the candle, the body, to close above it if we were short here. So this would have been, again, this is a good example of how it doesn't work sometimes. Nice and short, and then all of a sudden a massive candle takes away a lot of our profits. But anyway, but as you can see here, this has been biased to the downside. The short was actually the first cross there is there, and that's gone short, but it's then stopped. Well, it won't have done because the stop loss would have been there again. The stop, so that would have been the last cross there. The 7 o'clock candle on the 27th. Stop loss would have been up there, gone against you, but now it's gone lower, come back up. It's flattening out. It's not a great trend, but eventually we got this big burst lower. So now my stop loss would be there on this 4-hour strategy at 24,750, and we're finally in the pips. And this is essentially earlier I went long on this last night, and it should have been short. I made a mistake, but just open the what we did last night before I go. So I hope that makes sense, Moy. If you want some more, I'm going to do some more webinars in February as well on like each of these different systems. Heiken-Ashi candles, I really like Heiken-Ashi candles. So you see what I'm saying here? There we go. That's a good example. So as we speak live, so both the blue and the K and the D line now are both into this overbought area. Last time we were up here, we're getting a bit stretched, so I might have closed out the second half of that long position as they've both now moved into the overbought area. Obviously, like here, they could then move out and flatten out and stay and move higher and higher, and that's what might go on. So I'm still hanging on to, unless this retraces quite tightly, this candle to take us out here, because that's where my stop loss is now. But I've bagged 70 or 80% of the main move. I mean, it's not a massive move, but we've the theory works, and that's the key thing. Follow the theory, keep the process the same, and just repeat it and accept when you get losers. It's just part and parcel of the game. So that's still playing out. Let me just go back to this morning. Let's go back to the daily time. I'm sure what happened last night, and I made a mistake to be short. So this was long last night. You can't really tell on here. I've got the 4 hour. I went long at close last night on a half a position. It should have been it's this one here, isn't it? It should have been a short is what my system had traded. I'd misread it on my system, and this is what happens. It's part of the risk of trading. But my stop loss is way down here this morning. But when I was trading this morning from like 7 o'clock, let's find it. So this is the opening gambit this morning. My stop loss is down here, and when I first opened it up, this is the 5 minute time, remember, and the stop loss was all the way down here on the 4 hour. And so I'd seen this earlier. This was drawn this morning before we opened, just before 8 o'clock this morning. I'd been watching this since 7 o'clock, so it was trekking higher. We saw the touch of the outside of the Bollinger Band. So I got in. I got filled here. I'd actually got filled here at 58, 55 it was. So we were short here, and we took it all the way down there. And at the same time, I'd seen that this had come down. I'll go back to the hourly chart again. So from getting here long, I'd seen that this had moved down significantly before I'd woken up on the. You see that? That's the 5 o'clock to 6 o'clock kind of. It'll come back a bit whilst in the hour I was watching, but I'd had enough then. So I then rammed the stop loss up, and it reduced the loss. The loss on the DAX this morning was only 48 points. It could have been all the way down here, 100 odd points. But anyway, that's one of the beauties of watching early. And as I say, I really like this. I don't know if you're still here, Mo. I've been prattling on for ages, haven't I? The 5 minute time frame on the DAX, and we've just seen that live, and that was the one which I actually took on our Trade Locker platform as well. To take that trade. So that's a mean reverting strategy. So anyway, I'm going to wrap this up now. I've been here far too long for this day. It's 2:15. I wasn't planning to be here an hour today, but anyway, take care, everyone. I'll see you tomorrow for a wrap of the week. I'll see you next week if you're not around tomorrow for later on in the day, more around about your evening time in the Indian subcontinent, and see if we can get a bit more reaction. Moy, bring your friends. Let us know how you get on. I'll have a look at your Discord chat. Let's have a look if you put it up on Discord account. See, let me just refresh. All right, there we are. Dollar CAD. Yeah, very good. That's you, is it? Okay. Moy, there we are. Okay, Moy, my friend. We'll have a look at that. So, you're a market profile trader, okay, with TPO, okay, and FXCM, okay, very good. Put them on before you take them, and otherwise the moderators will take them down. But thanks for your time today. Appreciate it. All the best, everyone. I will see you tomorrow. What's happening tomorrow? Let's have a look at the calendar. It's all just days, isn't it? Friday, we've got Canadian GDP. Oh, core PPI tomorrow, so we'll be live. Same time tomorrow, 1:15 my time, 13:15 GMT for the PPI data. It's delayed, isn't it? It's a delayed one. And see what the German CPI and GDP numbers look like earlier on in the day. And interesting Tokyo inflation as well tonight. So is that just one of his printers? That's just appeared 9:30 my time. Trump speaking. It must be a press conference. It's not. I don't think there's anything actual scheduled. Due to speak at the White House. Okay, it might be announcing. Who knows? New Fed chair. Will he say sorry for what's gone on in Minnesota? I doubt it. He doesn't do that, does he? Anyway, news all the time. So just be aware of anything that might come out of that press conference. Something on Iran. Yeah, careful. All right, guys. Thank you very much. I will see you tomorrow, same time, same place. Be good, be safe, and we are the Prop Trade. So do join us, my friends. Take care. Bye bye.